Hello, everybody. C.Ray Brower here with your perfect home or place, depending on where I'm at and who I'm talking to. We're here today with Becca Mock from Diamond Legacy Insurance, and she is going to let us know about what's going on with California insurance because it is a little crazy out there, and that is coming up next. And we're back. How's it going, Becca?
It's going good. How about you?
Just another day in real estate paradise.
Living the dream.
been one of them mornings with a transaction we're trying to get closed. And
Understood. Yes.
Yep. Lender wanting things that had already been sent, and I don't know. It's been a barrage of emails and text messages and phone calls, but I think we're on track again.
Oh, good. Yes, I can definitely relate to that.
So, how's baseball season been going?
Good. Yep. Going out to Minnesota next week to see him play for a couple days, and then he'll be home in July. So it's good. Yeah.
Very, very nice. Very, very nice. Yeah. We're headed out next Thursday to help our daughter move to LA. So.
Oh, nice. Okay. That's exciting.
I don't know about nice. I was hoping not to be rodeoed into that, but.
Absolutely. I understand. Moving is not fun.
Well, it won't be too bad. My new son-in-law's company is paying for the move, but
Nice.
They don't have a place to move into, so they're packing everything up into a pod, and then they'll take it down there and store it until they find a place. But
Right.
There's all the knickknacks and plants and things that can't sit in a pod for a month or more. So
Right.
we're loading that knickknack stuff up, but that'll
Okay.
be a trip. That'll be a trip. Yep.
Yeah.
4 days worth. So do a little visiting and what have you. So yeah.
I'm sure she appreciates that.
Yep. Now that she's all married up, did that the first of the month.
Oh,
So
that's exciting. Congratulations to her.
Thank you. Yeah.
I don't think I've ever met your daughter.
No, I don't believe so. Yeah. She's let's see, 38 now.
Oh, wow. Yeah.
Yeah. First time though. First marriage. So.
Well, that's good. Yeah.
Waited and got the right guy, which that's a good thing.
Mm-hmm. That's important.
A couple of his old friends at the wedding asked me what I thought of him, and I said, well, I do. I like Jesse. I like him a lot. He's definitely the first one that she's brought home I didn't have to run on.
That's a plus.
That's a plus.
That's a plus. I'm always telling my kids, if I don't like them, don't even bring them home. It's not even an option. If you don't think I'm going to get along with them or I don't like them, don't even bring them home. And yeah, I mean, it would take a lot for me not to like somebody. So if I don't like you, there's a big reason. So
a big reason. Yeah.
Yeah.
Yeah. There's a lot of people that don't like dogs. And I don't trust those people, and people my dogs don't like, I don't trust either. I don't like those people either.
Yep. Good barometer. Yeah. That's funny.
So Father's Day went well.
Mm-hmm.
The chicken fettuccine looked amazing. Were those snickerdoodles or were those oatmeal?
No, so they are Heath Bar cookies. So
Heath Bar.
Yeah, so you can buy, like you buy a bag of, chocolate chips, you can buy a bag of crushed Heath Bar at the grocery store. And I thought, oh, that sounds kind of good a couple of years ago, and I made it. And those have quickly turned into his favorite cookie. So you basically make it just like a chocolate chip cookie, but instead of chocolate chips, you throw in the Heath bars.
Put in the Heath bars.
And they kind of caramelize when you cook them. And so they can be a soft cookie, but they can also be a crunchy cookie. But those are his favorites. So but snickerdoodles are his second. But those are so much harder to make. So.
And they're my favorite ones to make. Everybody always rodeos me into making snickerdoodles. I am the resident snickerdoodle guy.
Okay, good to know. So we decided. I've been wanting to master the because we got a Blackstone last Father's Day. He got a Blackstone, and so I've been wanting to master that, because normally I just say, here you go, cook whatever, and he does it. But I want to get a little more fancy with some of the meals, that one included. So I said, this is what we're going to try today. So it turned out really good.
Very cool. Yeah, it looked really good. Looked really good.
Yeah. How about you? Did you have a good Father's Day?
Had a very nice Father's Day. It was a very quiet Father's Day. Daughter was coming home from her honeymoon on Father's Day. Aww. And son and daughter-in-law were coming back from a wedding in LA on Father's Day. So neither one of them were in the area at the time of Father's Day. So it was a very quiet Father's Day at home. Burnt a little steak and made some kebabs and played a little golf. And
nice.
So yeah.
Good.
Had a little sip and whiskey.
Even better.
It was a perfect day. Perfect day.
That's great.
Yep. So California insurance, we have really been seeing some crazy stuff. This house that we're going through all this stuff in escrow right now actually had to extend escrow because the buyer went to 5 people. I tried to send them to you, but they didn't choose to do that. But of course, they're not my client, so I can only do what I can do. Yep. But they went to 5 carriers before they were able to find insurance. What is going on besides the state of California burning up?
Right. Yeah. Well, yeah. Luckily, we're not literally on fire right now. So, but I mean, we could really take a lot of time to talk about this, but basically, my humble opinion is that it has to do with our insurance commissioner and some of the choices that he's made. But ultimately, a lot of carriers are revolting because they aren't able to they want to stay solvent. So it's not even a matter of profitability. It's a matter of staying solvent. And because he is either making choices not to help them or he's taking a really long time to approve rate changes, what's happening is the carriers have taken things into their own hands. And so they are either, worst case, pulling out of California. I haven't seen any of them do it permanently. I've seen all of them announce, this is a moratorium. This is something that is happening for the current future. But we're seeing things, that's worst case scenario. We're seeing things like agencies or carriers trying to slow down the market. So they're changing their billing plans. So they're, instead of offering monthly, they're only offering a 1 pay or a 2 pay, for example. We're seeing underwriting tighten. And so things that used to not be a problem or an issue are now a major problem or issue. On the home side, on the auto side, we're seeing a lot of, carriers not taking any policies that have claims in the last 3 years. And some carriers don't even want to see comp claims, which would be like, windshield or towing or, right, an animal hits your car, and so it's just really, really tightening up. And so what used to take me, you would send me an address, I'd pull it up, I'd look at the MLS, and I would know after just looking at it and talking to the client, okay, this is going to be a great carrier for them. And now what I'm having to do is quote them in maybe, 4, 5, 6 carriers before I get to one that, will accept. The other thing we're seeing a lot of is really long lead times, because before, as agents, we could just go into the quoting system, plug it in, and we'd either get an approval right then and there, pre-underwriting approval, or it would say, oh, there's a red flag to this. It's going to go to underwriting. Now what we're seeing is that we don't even get to quote online. We have to submit, this is going old school, paper apps.
What?
Yeah. Yeah.
What?
Some of the carriers are having to like handwrite it out. And then we're seeing anywhere from, I'd say most average is 3 to 7 business days to get approval. And so it's really tricky. So now what I'm doing with a lot of the properties that are, higher fire, higher risk, whatever the situation may be, is instead of going from one carrier, waiting for an answer, next carrier, waiting for an answer, I'm going and submitting, okay, I think 6 carriers will take this. And so I have to go and submit 1, 2, 3, 4, 5, 6 applications, hoping that maybe one of them will get approved.
Wow.
So it's making my job a lot harder. It's a lot more time consuming. And then of course, pricing, is an issue. And I think we've talked about it before. I think last month we talked about, what you're seeing now is not going to be what the pricing is when you buy a new home. So if you buy, the seller tells you I'm paying, $1,000 a month. Don't expect to be paying that anymore. And I think honestly, the truth is that most carriers, just to stay solvent,
Right.
They're going to be taking, I think we saw numbers anywhere from 40% to 160% increase in order to just stay solvent.
What?
Mm-hmm.
160% to stay solvent, not to make money,
not to make money,
to break even,
mm-hmm.
Pay the bills, keep the lights on.
Right. Yeah.
Wow.
The claims that are being paid out right now, I think one of the carriers I saw, for every dollar they collect, they're paying out $1.41 in claims. And so they're completely upside down. And part of the problem is that the commissioner, the insurance commissioner of California, didn't approve any rate changes over prior to COVID and then during COVID. And then he wanted to get reelected. And so he thought, well, if I don't approve any rate changes, my constituents are going to love me. And, a typical rate change in California used to be, for a typical household, $10 more a month, right. Sometimes less, sometimes a little bit more, but we're not talking hundreds of dollars. And so, but he didn't approve these rate changes. And so now it's really affecting insurance companies because they haven't been able to increase their rates and charge current rates for years. And we all know that, especially over the pandemic, but, inflation has really gone up. And, especially for auto and homes.
Right.
And so that's kind of where we're at. So is insurance going to be cheaper? No, it's not. And I will tell you, too, that now that we are writing in more than just California, we're licensed in 10 states now. California is one of the cheapest places for insurance.
What?
Yes. I would have never guessed that. But yes.
Wow. What 10 states?
Oh God, you're going to quiz me now. I might have to. So, Oregon, Washington, Nevada, Idaho, Tennessee, Pennsylvania. Is that it? I have it written down here. I can't even see it. I think that's about it.
Well, that was 7, but.
Okay. I can't keep track. Let me see here. I think I have it written down where I can actually read it. Hopefully Joy's not watching this. Yeah, I have it written down here somewhere. Where is it? Well, I'll answer that question next month. Okay,
sounds good. Didn't mean to get you in trouble with the boss.
That's okay.
Wyoming.
Wyoming's another one.
Oh, Wyoming. Okay.
Yeah.
There we go. Let's see. That's 1, 2, 3, 4, 5, 6, 7, 8. Only got 2 left. Right on. So, no rate changes all the way through COVID. just because he wouldn't, because COVID, they were understaffed.
Yeah, no, I think part of it
Doesn't
was
really
that,
make a lot of sense, does it?
well, I think people were really struggling, right? And so people were struggling, and therefore I think that he didn't want to approve rate changes because he didn't want it to, affect, the household budget any more than people had already been hit. So I think that was part of it. And I mean, during COVID, he also required and mandated that insurance companies refund money. And so that all seems great, but in all actuality, there was a lot of risk that was still there. People were still driving. And what I think people don't realize is that the people that were home more, there were more home claims.
Right.
And so, you may not have had the auto claim as much, but you still had home claims, and there were still car accidents happening. So was there a less of a risk? Yes. Did it warrant a refund? In my opinion, no. I mean, don't get me wrong. I pay insurance rates, but the refund that I got wasn't any. I think I got a $40 refund. I mean, it was.
Yeah, I mean, it was like nothing. It was really, truly nothing when you come down to it, especially when now 3 years later, we're looking at 160% increase. Even a 40% increase is tremendous,
Yeah.
It just, let's go ahead and not raise the insurance rates so we don't affect people. But we've affected them because they can't go to work because we've mandated that they stay home. Mm-hmm. I think that warrants the koozie cup. Yeah, let's do it the dumbest way possible. Oh, right. My God. Oh, right. My God. Right. That is just insane.
Yeah.
That's insane. Yeah. How does that even make sense?
Yeah, a lot of it doesn't. And obviously I'm not, at the Capitol. I'm not there seeing everything day to day. This is my personal opinion. I feel like there's quite a few insurance agents that feel the same way. Matter of fact, I haven't met any insurance agent that doesn't feel the same way. Yeah. So it's just, it's really gotten a little political, unfortunately. And I think what he's really doing, and he's looking out for the voters, but he's not looking out for the insurance companies. And therefore, by doing that, he's not looking out for the voters because we're now in this situation. So, it is what it is. But insurance companies are basically doing whatever they can to stay solvent. And they're going to take matters into their own hands because they don't have the backing of the Department of Insurance right now.
Well, yeah, you can't continue doing business and lose money. Mm-hmm. You cannot continue doing business and lose money. Like you said, collect $1 and pay $1.40. That
right. Yeah.
Only the federal government gets to get away with that.
Right. Yeah. Well, and I'm hearing rumors. I don't know how much of it's rumor, how much of it is just opinion, that fourth quarter we're hoping for a turnaround because he is starting to approve rate changes. But unfortunately, the rate changes that are being approved now were submitted with the California Department of Insurance 2, 3, 4 years ago. Right. And so, it's already, like he did a webinar 2 weeks ago, and he was saying that insurance carriers were slowing down their approval because they would submit for a rate change, they'd get approved, and then they'd go submit for another rate change and then another rate change. And I'm like, well, yeah, because they have to catch up, So
nothing in 20, nothing in 21, nothing in 22, or in 23. That's 4.
Right.
That's
right.
4 that they should have had. And
right. Yeah. Wow. It's bad. So are carriers still writing? The short answer to that question is yes. My biggest piece of advice to anyone who has been non-renewed or is buying a new home is to start looking immediately. If you get a non-renewal notice and it's not until August, do not wait until August. Right. Go start looking now. And what I'm recommending to those clients that call me, if I'm able to find them a quote that is approved, underwriting approved and ready to go, I'm suggesting to them that they don't wait until August, that they start it now. And then what will happen is when they cancel the current policy, the carrier will just prorate the monies that they've paid and refund you the difference.
Right.
And I think Geico is the only one in California that charges a cancellation fee. I think most carriers, they don't charge that. So, and the reason I'm recommending that is that I've had, I think probably 2 handfuls of clients where I've quoted them something, had underwriting approval. And then by the time they came back and said it's a go, or I got the lender instructions to start the policy because the home was closing, right, and I went to go start it and the carrier has already backed out of California. And so then I'm scrambling to find, a new proper, new coverage.
Yeah. Yeah.
So, yeah.
In 30 days, they've quoted, accepted, and then turn around and adios.
Yeah. I had one carrier that told us, okay, we're not writing in California anymore. Any quotes you've done up through a start date of June 5th, we will honor. And so I scrambled. I had 3 clients with that carrier, and I called all 3 of them, got the payment information, went in to go start the policies, and they were all effective prior to June 5th. No changes to the policy. I went to go pay in full for all 3 of them, and they go, sorry, we're not writing in California anymore. I'm like, wait, your email said to us June 5th.
Wow.
Said, sorry.
Wow.
So that's the kind of stuff us agents are dealing with right now.
That is crazy.
It is. I've never seen anything like this. And I really, really hope we don't get to the point where California insurance is like Florida insurance. Because I think last year they had 40, don't quote me on this number, it was like 40 plus insurance carriers that went insolvent. And so that's a doozy. So
wow.
Yeah. So we'll see. Hopefully we can get this turned around.
So they went insolvent. So insurance carriers are actually by the state. Mm-hmm. So whatever carrier, Geico, each state has its own solvency. It isn't the United States. It's each state. Correct. Okay. Okay.
Yeah, and you have to go by, that state's Department of Insurance laws. So each state has, different requirements, whether it be, bodily injury and property damage minimums or med pay minimums, things like that. So.
Okay.
Yeah.
Interesting. Never really thought of it. I mean, it makes sense. It makes a ton of sense. It's just, something that you really don't think about.
Right. Yeah. So, yeah.
Well, I think you brought some great value to everybody today. I really appreciate your time. It's great to see you always. I am looking forward to next month.
Yes, thanks for having us.
Go out and be the sunshine in somebody's rainy day. Anybody has any insurance questions? Becca's insurance information has been scrolling below. Make sure subscribe, ding the bell, all the good stuff if you want to stay in touch with all the things that we're doing, because there's a lot of new stuff coming up. You all go out and be the sunshine in somebody's rainy day, and always remember to C.Ray to find your perfect home. We'll talk to you guys real soon. Thanks again, Becca.
Thank you.